this is the market picture at close for you. 0.5% off doesn't look too damaging, but for the fact that we were trading well and truly in the green for most part of the trading day by 0.5%, at point of time even 1% higher. So from the highs of the day, we've lost almost 75 points on the Nifty, well, almost 1.5% from the highs of the day. So that's a sharp slide that has come along. Mind you, this is despite the fact that the global picture is looking okay. So if you look at what's happening on the FTSE CAC DAX, or for the matter the Dow futures, they're still holding out in the green. But the S&P warning really putting the spanner in the wheel.
Yes, indeed. Just to kind of reiterate, the European markets, of course, holding up. There is still a lot of uncertainty on what comes out of the Greece elections. In fact, most analysts believe that next Sunday's or the coming Sunday's elections may not lead to a quick resolution. So still might be tentative. However, if a strong stance is taken by the new government, then perhaps there will be more clarity on whether Greece stays on in the European Union or actually exits. But that would give some sort of direction to where the markets go from here. For now, it will be the macro concerns which will impact India more than anything else. We should just recap for our viewers who perhaps might be joining in right now, seeing that big cut in the last hour or so coming in on the index. It's primarily been on account of S&P giving out a warning that they might be looking at downgrading India. They haven't done it so far, but they are saying that India may lose its investment grade. Relative to the other nations, they believe that the outlook for India looks most weak at this point. This in comparison to Russia, Brazil and China as well, where they believe there is more financial and fiscal stability. They are, of course, talking about a mild erosion in India's external and fiscal profile, higher GDP, to depend on further fiscal reform, which they don't see coming by. And most importantly, they have stated that if there's any economic shock, then India would be unable to adapt to what that might bring for the economy as a whole. And that puts it high up on losing its lucrativeness or its creditworthiness as a market. This would impact from a perception point of view a lot of foreign investors, and that's the key aspect that we need to focus on, how it brings about perhaps a change in the way funds are looking at India relative to other emerging markets, or particularly other BRIC nations, Brazil, Russia and China in particular.